This is our next speaker, which is Andy Virgo from Lendinvest. As you can see, he's actually lost weight by looking at that photograph. They do say a static camera does put on 20 pounds, though, Andy, so maybe that's the reason why. But anyway, you should have received literally this morning, and there has been a couple of you that have registered since I started talking, but you should have, so you'll be getting this in a short while. You should have received this from me via email this morning, which is Lendinvest by their rates guide to put your teeth back in. Okay, so have a look at that when you get a chance. Andy will be covering some of that today, but it's a little bit more about why you should be using Lendinvest, and there's many good reasons for that. So Andy joined Lendinvest in 2017 as a BDM with over 30 years experience in the mortgage industry. I've known Andy for, I can't really remember now, so very long, I can't remember. He supported Lendinvest's entry into the buy-to-let market. He basically was the brains behind the buy-to-let launch, and it's gone incredibly well. Personally, my opinion, and it's not blowing smoke up his behind, I think it's one of the best launches I've seen of a product because it brought something completely new to the marketplace. And he's assumed full responsibility for the product as a whole. And he previously worked for NatWest Bank and Interway Commercial, successfully operated as a mortgage broker, both for Christie Finance and his own property finance brokerage. After winning and you'll probably hear that they've won the NACFB Best Buy to Let Lender a couple of times, by the way. And there might be a few slides that contain that as well. And in 2019, he was promoted to Director of Buy to Let. So you've actually Director of a lender speaking today, which is fantastic. He's responsible for basically development and success of the whole proposition. His interesting fact, and he won't be doing his routines or his presentation day as a song and dance, but he was once a red coat at Butlins. I'm hoping he's still got the jacket and it still fits. And Andy, it's over to you.
Thank you, Tony.
I'll see you in about 20 minutes.
Thank you. As flattering as ever. Good morning, everybody. And thank you, Tony, and the team at Specialist Finance for giving us the opportunity to kick off today's event. I'm going to talk to you about the Lendinvest buy-to-let proposition, but I'm going to kind of come at this from a slightly different angle. And so bear with me. Hope you find it interesting because there's a little bit more to just rates when it comes to a finance proposition. So off we go. First of all, my favorite slide, one of my favorite slides, apart from the awards that we've won, is the slide that tells the story about Lendinvest. So it's really important to recognize the kind of milestones that we've hit on the way through. So set up in 2008, the two owners of our business, who still own 75% of Lendinvest, which is quite a feat. They set up the business as a bridging lender off the back of the credit crunch. They saw an opportunity, and as such, there was that opportunity to start providing bridging finance at a time when funding was quite hard to achieve. We never went down the peer-to-peer funding route, although that was always an option. Instead, the guys secured investment into the business to subsequently lend that money from financial institutions and big-time investors. So as the years go by, it's quite a slow start, small business, growing and growing. And the real milestone came in 2015 when we'd secured some big funding from abroad, but we also launched our development proposition. So all of a sudden, we were able to not only fund the purchase of a plot of land, but also provide the money for people to then subsequently build residential houses. So that's the business as it still sits today. Very much bridge, very much development. And then 2017, I joined and it all went wrong. No, so 2017, I was wowed by the business's determination to disrupt the mortgage market and be a very different lender. So to come into the mortgage market, the buy-to-let market specifically at that time, there was a hell of a lot of competition. So we launched in December of that year a proposition that started to win friends quite quickly. And we've grown that proposition as the years have gone past to the point where at the end of our second year of trading, we won that accolade, the best buy-to-let lender, voted for by the NACFB broker members. And that was pretty tremendous for us, being a new lender to market. Now, we were being funded by Citibank and National Australia Bank. They have £250 million funding lines in with us each. But then the real coup came in early 2021, where we secured £500 million from JP Morgan. Now, JP Morgan are a huge, worldwide, massive company. So to achieve their support and their buy-in to what it is we were doing was pretty significant. And here we are now lending as much of that money as possible, and they're talking about more and more and more, giving us more and more. So what does that mean? Well, don't forget, December 2017 we started. In March 2021 we had reached £1 billion worth of originations, and May 2021 £1 billion worth of completions. So we're pretty much on the way to securing a slot, a well-earned slot within the industry that is buy-to-let. So how come we've been so successful? Why are people coming to us? Why are people coming to Lendinvest as opposed to the other lenders that are out there? Well, we focus on the outcome first. By focusing on a good customer outcome, we work our way back through the journey to the point where we can confidently sit here and say that we do things slightly differently. Process is all about the process that we use in order to get the application in through the door, through the underwriting process, to the point of completion. And when you link service to that as well, those outcomes can only be positive. So people come back to us time and time again based on the journey that they've had with us as a lender. But let's kind of try and bring that to life in the form of an analogy. So imagine I'm only hesitating because of the diggers going past. Apologies. So imagine your shopping experience. We all, as people, have to eat, and we or our other halves go to the supermarket every week. Now, there's a decision that has to be made as to which supermarket you go to, because look, there's lots of people, there are lots of different supermarkets there. It could be done the decision could be made on location, the proximity to where you live. Now, I know that we don't go to our most local supermarket. Now, furthermore, your decision making kind of can be influenced by not only how far you have to travel, but also when you get there, what's it like for parking? During COVID times, is there a queue to get in? I know I've driven past one supermarket because there was a queue and gone to a different one. When you're in the supermarket, what's it like navigating the aisles? Are they too narrow? You struggle to get through the supermarket nice and easily. You're always bumping into people. Can you find what you're looking for on the shelf? Do they stock what you're looking for? Are there people there helping you through the process of your shop? Are there people trying to find a way to make your journey and your experience as simple as possible? And as you've gone through the supermarket, you've managed to collect what you want, you've got to the checkout. How easy is it to complete your purchases? How easy is it for you to get through the checkout process? Is somebody guiding you through it? Are they talking to you nicely? Are they throwing the food down the conveyor belt? And then when you leave, you think about the club card points that you've just earned for shopping there. What incentives are they giving you? Money off of your fuel next time you purchased at their petrol station. There's very much kind of interest in repeat borrowers, repeat shoppers. So from that perspective, when you look at where I live, there's a Sainsbury's and a Tesco's on the opposite side of the road to each other. Now, the Tesco's is quite old. The ceilings are quite low, but it's as busy as the big Sainsbury's opposite that has nice high ceilings and wide aisles. Now, the Sainsbury's is more expensive than the Tesco's, so why are people not flocking to Tesco's and instead they're going to Sainsbury's as well? So let's look at our mortgage market. These are our peers. These are the lenders that you're dealing with day in, day out. So consider your shopping experience with these lenders as well. Some of us are more expensive than others. If you look at the likes of Paragon and Precise and now Foundation, there's a rate war going on between those three, more so Precise and Foundation, to try and secure as much business as they possibly can. On their coattails, you've got Keystone, Lambay, Fleet, even ourselves. We're bringing out new products to try and compete, win market position. But you can't win business on price alone. There's no point having the cheapest products and having the worst service. Otherwise, we'd all be shopping at a supermarket that shall not be named, where potentially you end up going in and having a cheap shop, but not necessarily a great journey. So always consider when you're looking at the sourcing systems quite how those lenders take you through the process. And when I say club car points, I also refer to proc fees as well. So what does that result in service? What does that look like in service when it comes to a lender's perspective? Well, the people that we employ, the BDMs, the case managers, the underwriters, they're all subject matter experts. They know what they're talking about. They can make a difference to your day by enlightening you with some form of intelligence about the mortgage market, and they actually know what they're talking about when it comes to our products and our processes. And those people need to be available all the time. They need to be dependable and consistent in the way that they're speaking to you. And we want to form a partnership. We refer to our broker partners as exactly that, partners. When it comes to SLAs, we want to make sure that we're not flipping between being busy and being not busy, and being fast and being slow. And you want to be able to get access to the right people to make sure you get the right answers to the right questions when you need them. Those are the things that we provide, from access to case managers and underwriters to easy access to BDMs or a help desk. Now, when it comes to the process, you'll hear me talk about fintech a lot through this. Fintech is technology used in the finance industry. Now, there was a report done by Salesforce, or some research done by Salesforce, or a CRM system, that actually identified that 68% of customers actually focus more on a frictionless process than they do price, or at least that is as important. So when it comes to us focusing on delivering outcomes, there are things that we need to do to try and make sure that we present to you a process, a flow, a way of dealing with us that strips away the complexity, that asks less questions. And in order for us to do that, we will use the technology that's available to us. We will use APIs and we'll embed them into our system so that we do things much more quickly. We'll digitize as much as the process. And you will hear us being referred to as a disruptor time and time again, because that's what we are. We are looking to do things differently. It's all about property finance made simple. Now let's look at a couple of those individual points that are actually in our process. So we started off using Onfido. Now we use Jumio because it's a more accurate piece of software for identification verification. So no longer are we asking for signed, certified, true copies, true likeness, passports, driving licenses. We're not asking for that. We're asking for you to take a photo of your passport and a selfie, and the biometrics within that actually works out that the passport is legitimate and you are who you say you are. Now imagine when you're walking down the shopping aisle with your trolley while your other half's looking to try and find some form of bolognese sauce for dinner that night. What about if you could actually read your mortgage offer and sign your mortgage offer on your phone as you're doing your shopping? DocuSign allows you to do that throughout the whole process. We do not ask for wet signatures. We ask you to sign online. Now, online payments are very much part of day-to-day life, but to bring into finance, to the finance industry was quite key. But then the real big winner was open banking. Here we are with people with mortgage payment holidays. We've been on furlough, had bounce back loans. From that perspective, how can we make a real-time underwriting decision when we're looking at bank statements that are months old? There's a big misunderstanding about open banking. People think sometimes that it means we can go into somebody's bank account and trawl through their conduct. We don't do that. We're presented with a dashboard. We're presented with the highlights of somebody's financial position and their conduct. Now, going back to a few years ago when we were analysing portfolios and working out if the portfolio information that you guys have provided us for a customer was correct or incorrect. So we were using Rightmove and Zoopla and all sorts of things and manually checking properties and property prices. That was taking up to an hour each application, depending on the number of properties in the portfolio. Now it's done within seconds via a link into Rightmove. Equally, credit-backed dips, something we've been trying to launch for a long time. Equifax have got a lot to answer for how they've made life easy for us. We'd love to have delivered credit back dips a long time ago. We actually start testing for that tomorrow, testing on our ability to provide credit back dips. But we're already using Equifax in the background. We don't credit score, we credit search. So using the APIs that Equifax give us to be able to do the credit search in the background means that we can get through the process much more quickly. There's about 50,000 data points that actually are presented to us or to an underwriter in the form of a 360-degree case view. We've invented this ourselves. This is enabling an underwriter to, in one screen, see all of the salient information they need to make the right decision to be a responsible lender, as there should be responsible borrowers too. So all told, from this perspective, we're doing everything we can to disrupt the mortgage market and provide the best, most frictionless service possible. And I don't know if you'll notice, but we don't ask many questions. And the reason we don't ask many questions is we are able to go and find out a lot of the answers without actually asking you. So our mantra is to make sure that we find the answers without having to come back to you and ask for all sorts of reams of information and paperwork, because the information's out there. It's about us having the right links to the right systems. And what does that look like in terms of our current service levels? Well, back in January 2019, Fleet unfortunately closed down for a quarter. Now that was our tsunami quarter. We were inundated with applications. We had people working weekends, working nights. We were delivering pizzas to the office. We had directors in helping process cases. We're currently, so you know, there were offices. The office was full of different people working on buy-to-let cases because we had a massive uptick due to Fleet being closed. Here we are now. We've just experienced our 2 biggest months for mortgage completions. We've completed double the amount of mortgages in terms of volume and size and number in the last 2 months, each month, month on month, than we did during that tsunami. And we've done it with 8 people without breaking a sweat. That's how we're able to offer decent rates, because our cost in the background is low. We don't need oodles of staff in order to process applications because we use technology. Now, we haven't talked about the property types and the products yet. Well, quite a standard lender in that we'll fund your flats, your houses, your flats above commercial, small HMOs, large HMOs, and multi-unit freehold blocks. All our criteria is available online, and Tony has sent it to you as well. Now, we're not members of the PRA. We're not regulated by the PRA. That enables us to stress test at 5%. Now, I can show statistics to prove that our best-selling product is our 3.395% stress test, 75% 5-year fix. That's our best-selling product. I guarantee you that the best-selling product within other lenders is the pay rate product. What I'm saying there is that where people have properties that are yielding less than is required to stress at 5.5, but more than is required for a pay rate, the 5% ICR product comes into its own. It's a cheaper product than the pay rate product. It's our best-selling product by far. To be able to stress test the background portfolio in a flexible way means that we're able to help borrowers who have potentially lower yielding properties in their portfolio, London and the South East properties. We've increased our concentration limits. We'll lend on more flats now in a block. We'll lend on more properties in a certain postcode. We'll lend more to individual landlords. But one of the key things for you guys as brokers that are trying to be different with your customers, with your landlords, talk to them about appetite statements. When they're making their next application to us for a purchase or a remortgage, contact your BDM, ask them to secure an appetite statement. An appetite statement is us committing to lend to that landlord the money that they're asking us to lend over the next 6, 12, 18 months. An appetite statement. We're rolling out the red carpet to them. Now, June the 1st, we launched our product updates. We were actually the last of the lenders to make their move, because there's been quite some activity in our sector through those lenders that I listed, where rates were coming down as we all search for that business that's going to get us through this probably quieter summer. So our 2-year fixed rate standard product, we reduced our 70 and 75% product interest rates. So bizarrely, our pay rate deal, not the best-selling second best-selling product. It's that 2.75% 3.24 rate. There we go. The 75% 5-year fixed 3.39, our best-selling product. And then we've got pay rate products. We've introduced 2 new pay rate products, 65 and 70%. Now, those are to help those properties in London and the South East, where you have higher value property, a lower yielding property. You don't necessarily want or need the higher loan to values. So pay rate products to help those landlords with those lower yielding, higher value properties, London and the South East typically, that's where we're seeing a lot of activity. And those products have been welcomed by our brokers since we launched them on the 1st of June. So there's been price drops across that range, some of them significant. I mean, that 75% pay rate product has been dropped by 20 basis points. Similarly, on our HMOs, our small HMOs, the 5-year fixed 75% product we've dropped by 31 basis points to 3.64. So rapidly since the 1st of June, lo and behold, we're being inundated with small HMO, up to 6 rooms, 5-year fixed rate, 75% loan to value applications. So those rates have been dropped across our small HMO product range. I'm currently working on our tier 2 proposition. I'm working on our large HMOs, and I'm working on our holiday let proposition as well, which is something that we really need to nail and get out for the future. So Tony's very good at providing everybody with up-to-date information around Lendinvest. Everything is also available on our intermediaries website, whether you access it by phone or by laptop or by iPad or by PC. Product guides, online calculators, packaging guides, everything's there for you to help you. So as I come towards the end of this, Tony did say I was going to mention it. The awards that we've won 2 years into our being in the market are fantastic. You know, it's a real pat on the back, and I'm going to celebrate these. We've won many more awards, but these awards are voted for by brokers. They're not paid for by advertising. They're voted for by brokers. And in 2020, we won it again. So we're doing everything we can to stay front and focused for you guys to vote for us for 2021 as well. Now, Tony's asked me to put in a couple of slides. There's a package of status that Tony and the specialist finance team have with us. So they have enhanced proc fees. You will earn as much using Tony and Tony's services and Tony's team services as if you came to us direct. The benefit of using specialist finance to assist you is they know our process and our quirks and how to successfully get an application in and through more than anybody else. So I'd always suggest using somebody who knows how to work with us to submit your applications. Another little slide Tony's put in here for me. Everything you need for your information on Lendinvest is available on the Specialist Hub. So please make sure you access that and find everything you need to know about Lendinvest via Tony and his team. So that's it from me. I hope that was of interest. It was a slightly different way of talking about our proposition. It's not all about rate. It is about service. It is about process. And our mantra is that we're looking to make property finance simple. Thank you.
Andy, wonderful. Just on the previous slide, all the things that Andy mentioned, the calculators, there are actually links from our website into their website. So you're not sort of like trawling around trying to find something. Obviously, we know where these things are. So we've already done that work for you. So just go to the Specialist Hub website, onto the Lendinvest page, as the link is there, and everything you need is there available for you. So we're coming to questions, Andy. We have a couple of questions from delegates, which is excellent. I've then got 4 questions that you asked to ask you, so just in case. But Michael Ashcroft, morning, Michael. Hope you're well. Has asked a very great question, actually. Do you do soft or hard footprints at dip stage?
Okay, so actually, I learned yesterday even that this question is the most asked question on Knowledge Bank at the moment. I think people are asking this question potentially because they're worried about people's credit search, and brokers don't want to put borrowers into a hard footprint search and potentially impact their credit rating. So currently, Michael, we do not do any search, soft or hard, at the dip stage. We are trialing the Equifax soft search. It starts tomorrow, the trial, and when we launch it, it will be a soft search at dip stage, not a hard search. We will do a soft search at dip stage when we launch it.
Excellent. Paula has asked the question, do you do limited company lending, and how do you deal with charges within a company, i.e. debenture charges, and also if the portfolio landlord uses private investors to finance purchases initially?
So we lend to limited companies, obviously. It's 75% of our business, and we do not differentiate in pricing between a limited company or a personal borrower. In fact, our ICR, our stress test for a limited company is lower than our standard stress test for other borrower types. We do not ourselves ask for debentures when it comes to limited company borrowing. So that's really important, because there are still lenders out there that will ask for a debenture. When it comes to the use of private investors, we just need to track the funds that have come in. We are not able to assist where somebody has secured funds from abroad, for argument's sake. From sort of like anti-money laundering checks. You're not able to check the funds where they've come from. If there's been a private investor, then we would check any agreement that is in place between borrower and private investor to make sure that when we've provided a mortgage and that private investor is paid off, then their interest in the property ceases. So as a specialist lender, each case on its individual merits, but we're very much able to deal with the quirks and nuances of those situations.
Okay, Philip Smith has asked, how smooth is your system if the client is not using open banking?
We only insist on people using open banking when they are telling us that they are currently furloughed or they've had payment holidays, mortgage payment holidays, because there's obviously some form of issue there in terms of their financial position. So we will insist on open banking. If the client chooses not to use open banking, there's just a few manual questions that we'll have to ask. So the onus comes back on the borrower and the broker to have to provide us with a little bit more information manually, as opposed to using the technology that's out there from open banking. So it doesn't really impact our timescales, as long as you guys get us the information as quickly as you can. And when we're talking about timescales, here we are talking about application to formal offer within 14 days. Currently, we've got valuers that are struggling to get around the market. They're taking some time, but when we're able to get the valuation back within a realistic timescale, we're offering within 14 days.
Okay, Paul has just come back with anti-money laundering checks. Andy, is that just on the property you are financing, or on all properties held in the limited company?
The property we're financing, Paula.
Excellent. What are we now? We've got 2 minutes left, so I've got a couple of questions that you said. There is another one being typed. What opportunity is there for brokers in the second half of 2021?
So we've got a couple of milestones coming up. End of September is the close of the stamp duty window for properties up to 250,000. So there's plenty of activity in Wales, the Midlands, the North, Scotland, all areas where we lend. There's plenty of activity in those areas for some of those lower value properties being purchased by landlords. So please keep in touch with your landlord clients and make sure they know that Lendinvest can help them. We're seeing a lot of first-time buyers coming out of the woodwork. They're realizing that they're not going to make much moving forward over the next few years on their savings. So to assist with their pension planning and inheritance planning for the future, they're looking less towards making money from their savings, but more using their savings to make money. So we're seeing an awful lot of first-time landlords coming out of the woodwork, and we'll assist them up to 75% loan to value quite happily. And then finally, from me on that topic, you've got the 5-year anniversary of the PRA introducing new underwriting standards that kicked in October 2016. So a lot of the properties that are coming up, or a lot of the landlords have got mortgages coming up at the end of their 5-year fixed rate period now, in between now and the end of September, where they use the old, very much more relaxed underwriting standards. And of course, there wasn't the whole portfolio and non-portfolio landlord situation then. So where people have got properties that have increased in value, they're now ripe for remortgage, like for like, or further, or get more out of their property as those 5-year fixes come to an end. Now using the new underwriting standards, which has seen the addition of pay rate products.
Okay, I've never seen so many questions for a speaker, Andy. This is great. Thank you, delegates. It's brilliant. But we are running out of time a little bit, so we'll have to be quick on these. I won't read all of Atul's question, but most of it's actually about a recent case. But how often do you vet your legals?
So we've always worked with JMW and Lightfoots as our legal partners. And when we realised that we were breaking them, we brought on some more legal partners. That's Burkitt's, Blacks, and more recently Juno. Now, if I had my way, I'd be offering a 30-day remortgage at the moment via Juno. Standard property application to formal offer in 14 days. 14 days to get the legals done, because Juno are a fintech solicitor. So watch this space for that in the future. At the moment, we can't offer it because the valuers are not reliable. We are now working with somebody else who will remain nameless to potentially overhaul our complete legal process to improve it even more. The answer to your question, Atul, is almost daily, definitely weekly, and something that we're very much on, because solicitors are outside of our control. Sorry, Tony, because solicitors are outside of our control, we do try and make sure that we're on top of them all the time to make sure that they are providing the service that we need. And currently they are snowed. Every single solicitor in the country is snowed. I'm trying to move house myself at the moment, and it is a nightmare.
Okay, and just to point out that the packages, such as ourselves, do give feedback to Lendinvest. You can have 10 partners within a solicitor's firm. 9 of them are great. 1 of them is a bit of a stinker. And we do give that feedback, so that the one that isn't so good, and we did come across a solicitor a couple of years ago who didn't use email. He did everything by post, which was obviously quite something of a problem. Right, we've got 2 more to say. What's your appetite for a large portfolio landlord?
Ian, that's our bread and butter. We're a portfolio landlord lender. We have no rules around how many properties a landlord can own around the outside. We will provide up to £5 million of lending to any one individual landlord. We will fund up to 25 properties with that landlord, and very much focused on, with that appetite statement. Somebody comes into us and says, I have plans to grow my portfolio by X properties, or remortgage my existing portfolio over X period. Talk to us about an appetite statement, and we will provide them with like a red carpet. And I'll just see quickly who's the best one to speak to from Paula to help you out a bit, Tony. She's got a landlord looking to grow. That is Tony Sutton, Paula.
Paula, speak to me afterwards. You got the number. It's on the screen there, actually, the 0800 number. Call that number. Give me a call. I'm available from 1 o'clock once we finish today. So give me a call. Andy, thank you so much. I really can't believe the amount of questions. That was brilliant. That was a fantastic presentation, Andy. Thank you. Just before we finish with Lendinvest, as an example of how good their system is, December, traditionally a really, really bad month to submit a case. We completed a case in 21 days. Not 21 working days, 21 days from start to finish within the month of December, which I was absolutely amazed by. But that's when you have a system that works, that's what can be done. Okay.
Thank you, Tony.
So, Andy, thank you very much indeed. We'll say goodbye. I'll speak to you soon, mate. Lovely to see you again.
Adios.
Come and see us.
Will do.
This is our next speaker, which is Stacey Woods from Selina Finance. Now, I've been in the second charge market for 38 years this year. And only 3 times has a lender come to market with something that I thought, wow, that is a unique product. And this was the 3rd time. This was a product that Selina had been around for a couple of years. But I came out with a product last year that really did make me think I could really, really, really do some business on this product. So that's what Stacey's going to be talking about today. Stacey, can you hear us?
Yes, can you hear me okay?
Fantastic. So Stacey's
fab. Okay, so hi everyone. For those of you that don't know me, I am Stacey Woods. I recently joined Selina about 10 weeks ago, so very, very new. But Selina brings something very exciting and fresh to the second charge market. So I'm very excited to talk to you all today about it. I don't know about you lot, but I'm looking forward to receiving a copy of Tony's cookbook. So make sure you send us a copy, Tony. I can't wait for that. So yeah, Selina, I've got something very exciting and new to bring to our second charge industry. So we're going to be having a look at the home flexi loan. So I think this is probably usually Tony's part, but I'll talk you through it anyway. So I've been working in financial services for the last 12 years. I started my career at Together in the post room, should I say. And that was my very first job back when it was Blemain Finance. I've recently joined Selina as key account manager, looking after all the brokers all over the country. My job is to grow and maintain strong relationships with our broker network. Selina brings something new and exciting to the second charge market, which I can't wait to tell you about. I have 2 little girls, Tilly and Lila, and I live in the great city of Manchester. In my free time, yes, believe it or not, I cheer on Manchester City with my eldest daughter, or spend my time doing face masks with my little one. So yeah, I juggle life being a working mum with 2 children. So interesting fact, I'm a believer. We have in fact been to 7 Justin Bieber concerts. I blame my daughter Tilly. Rubbish hobby, but I love him. So we'll move on to Selina, and that probably would have been better done from Tony. He would have had to some jokes to tell about me, but never mind. So the Selina Flexi Home Loan. So first of all, I'm going to give you a bit of a brief history on Selina, how it works, our product terms at a glance and where we sit in the market. And then we're going to go over some live case scenarios. So I've been with Selina 10 weeks now. So as you know, we're a startup business. We have actually been, oh, Tony's coming back.
I'm back. So I'll join you at the end. You have to tell me my connection dropped completely. So
okay.
I'm now back. So I'll see you in about 15 minutes, okay?
Okay, speak to you soon. Bye. So for those of you who know anything about Selina at all, we have been in the regulated space now for the past 6 months. Summer 2019, our company founded in the unregulated market to business and portfolio landlords. End of 2019, we submit our application to the FCA for our regulated lending permissions for second charges. Lo and behold, COVID hit. Weird and wonderful 18 months that we've had for everyone. So yeah, it was kind of put on the back foot at that point. It was kind of put on the back foot at that point. So sorry, the doorbell would have to go just while I'm presenting. Sorry about that, the joys of working from home. So yeah, lo and behold, COVID hit, and sorry, just bear with me one moment. Sorry about that, the joys of working from home. Someone would have to knock at the door when nobody else was in. So yeah, so COVID hit, and then, sorry, COVID hit. Give the dog a minute to stop barking so you can hear me. Apologies. Okay, so COVID hit, it did actually put us on the back foot, but it gave us 12 months to develop our platform for the portal, anything in the background that we was trying to work on. We had time to do that then, which was quite good actually, to be honest, the only good thing to come out of COVID, I suppose. We got our permissions Q4 2020, and we launched with our Flexi Home Loan product with all of our master brokers, SFS being one of them. So the Selina Flexi Home Loan and how it works. So it's a flexible drawdown facility. It's a little bit like an overdraft or maybe a credit card. In the States, it's known as a HELOC facility. It's something that in the States they use quite a bit. A lot of wealthy people have them in the States. But we have the Flexi Home Loan. It is secured on a main residence or a second home, not a buy-to-let. So for the moment, we're just securing on main resi or second home. It can be used for multiple purposes, and you would only pay interest on the funds that you draw down. Okay, so the two ways of using the Flexi Home Loan. So it's one product with two ways of using it. So this is the biggest question we get asked, I suppose. The drawdown facility element of it. So the borrower's approved credit limit. So here is the live example. So you have a 100k facility. Client would only need 20,000 day one. They only withdraw the amount that they borrow day one. So say, for example, they needed £20,000 for debt consolidation, and the remaining facility was going to be used for something later on. They would only withdraw their money day one and pay interest on that amount. You can use it like that: private school fees, stage home renovations, multiple purposes, or you can use it as your standard second charge, like your likes of Shawbrook, Together, UTB. You can withdraw the full facility and pay the full amount as you start from day one. Okay. So how it works. So your Flexi loan has a 5-year fixed or a 2-year fixed rate. So we've just come to market with a 2-year fixed. Reason for this, we was getting feedback from our brokers that when they were sourcing, say on 27 Tech, when they were sourcing for a 2-year fixed, Selina just wasn't coming up. So we've priced it exactly the same as our 5-year fixed, except we do a 2-year Flexi period now as well. So this is an example for you. So here's a client that's opened up a £75,000 facility. Year one, he withdraws 40,000. Year two, an extra 9, and so on until you get to the end of your 5-year Flexi period. At the end of this period, this client has only withdrawn 60,000. So the 60,000 then would revert into your standard term loan. So our maximum term would be 30 years. So if this client, for example, would have taken out a 25-year term, at the 5th year, that would then turn into your standard term loan. Okay. So our product terms at a glance. So we have a starting rate, which is a very competitive rate in the market, 3.95, with a maximum LTV of 75%. 30 years is our maximum term. It's a drawdown facility, as I've just explained. Yes, it can be used as a drawdown facility, but it can be used exactly like your standard second charge. We have flex or fixed or variable rates and instant valuation. So 90% of our loans that we have on our book today have been done with home track, not needing a real-time valuation. We have no ERCs across any of our products, and product fee of £995. Credit limits of up to 1 million, and our credit limit starts at 25,000. So again, we are quite competitive in the market. It is a different product to what's out there, but yes, it can be used two ways. I think the brokers that we're working with today use it for 50-50%. So 50% of clients come over to us and want to use it as a facility. Again, it depends what kind of client you get through the door. Some of them, if they're wanting massive home renovations, yourself, you don't need to pay the builder up front day one. Some people, we had a case that come over yesterday. Client wanted some home renovations and a bit of debt consolidation, but they also had the daughter's wedding in 12 months' time. So they didn't want to draw it all down, and they only pay interest on the amount that they withdraw. So it's a really good facility if you're using it that way. But again, just to reiterate, it can be used just like a standard second charge. Where we are in terms of pricing, so up to the 65% LTV, this would be the rate here, 65 to 70, 4.20, and 70 to 75% LTV, just a bit of an increase there again. And again, just to see where we are, we've crossed out Paragon because we know they're not lending anymore in the second charge space. So yeah, that's something that we've done recently. So 65% LTV, 3.95. Our 5-year fix is actually cheaper than your Shawbrook and your West one, just to get an idea of where we sit in the market. Okay, so this is the important bit, I suppose, because stage home renovation, this is a live case scenario that we've had in the office. So client wants to borrow 60,000. This is just, hypothetically speaking, a rate of 5%, 30-year term. So month one, client withdraws 20,000 with a monthly repayment of 107. Month two, they withdraw another 6,000. Say this time they want the bathroom renovating. The payments would increase slightly to 140, and so on and so on. So every month, as they withdraw a little bit more, their monthly repayment will increase slightly. The beauty of the Selina product is that they can overpay at any point. So say month 18, they get a bonus from work. They can pay off some of the facility, but the facility will remain open, flexible for the 5-year period. So yes, they might pay off half of the facility, but until they reach that the end of the flexi period, the client can pay back and withdraw again as and when they choose. So another good example, private school fees. This client had a credit limit of 80,000. Interest rate, again, just an example, 5% with a 30-year term. Each month, as they withdraw that little bit more, the payments will increase. The thing with school fees, say it costs, say, 15,000 over the whole year. With school fees, they have to be paid by the end of the term. The beauty of a Selina product is that, they could have the products open they could have the flexi period for 5 years, draw as and when they need to, and spread it over a 30-year term. School fees can be expensive. It's quite a popular one for us at Selina, the school fee product. Again, I loved Andy's comments on the digital process and yes, that brokers want the cheapest rate for the clients, but they also want a seamless journey and something that's going to be slick. Our packaging process is something that's impeccable. I've had lots of feedback. Bear in mind, I have only been with Selina 10 weeks, but the brokers that we've boarded and that I'm working with in the current climate, the packaging process, I suppose, we're trying to keep everything digital. They're a fintech lender, so there's no application form. We don't require a wet signature until the offer docs have been sent out at the completion stage. Direct debit mandate is done by Selina. So, we've had lots of good feedback that it's very, very quick. Again, something that Andy was saying about solicitors. Solicitors can hold things up a little bit, but again, this is something that's happening market wide. The process is quick, our side of it. We're trying to keep it as digital as possible. We don't require bank statements. 90% of our properties don't require about full valuation. So yeah, we've had lots and lots of good feedback with regards to our packaging process. Finally, some USPs to cover off. So home track up to 75% LTV, no restriction on loan size. We're new to market, so turnaround times are fast. We've had cases completed this week with 9 days start to finish. So one thing I will say is that we are very, very quick. It's great for you brokers to expand your market, to have something different and fresh within your offering. Yes, we can put it as you can market as exactly like your standard second charge, but you can also offer something new and fresh to your clients. Save them money in the long run with a product of with rates of 3.95, no ERCs, and a flexible facility. Then why would you not want to consider Selina when you're offering your client? For the customer, that it's a flexible credit facility. You only pay for what you draw down, and no ERCs. Hi, Tony.
Oh yeah, go on, you carry on. Just because I see the next slide's coming up. So
yeah. So for more information on the flexi loan criteria, we do have a full packaging guide that I can email out to you. If you wanted to submit an inquiry to Selina, then we've got the specialist hub, and we work very closely with SFS, and we do lots of business with them. They are completely, they understand how we work, so it's best that you contact via them. If you need to discuss a case, the contact details are on there. I think Tony's going to email this out anyway to you all. So yeah, that's it from me, really.
Actually, so we got to come to the questions part. Again, apologies, everyone. I don't know what happened to my system. Never happened before. It's a wired connection, and all of a sudden our internet dropped and kicked me out. And I didn't know where I'd gone. So I couldn't do anything at all. So we managed to get it back up, and here I am. So questions we got for you, Stacey. Thank you for that. Excellent. I mean, it really is, everyone, a product that is unique in the second charge market. No doubt expecting some of Selina's competitors to come out with something themselves fairly soon. Because it just makes sense. It really does make sense. Some of the clients we've had in the past before they launched, who really did object sometimes to having to borrow all the money up front and didn't want to rely on having to get further advances from people. So for further advances later on down the line, in case the lender wasn't lending, as an example. So we had a couple of questions that I saw. So Belinda has asked, can funds be used for business purposes?
Yes, so this is a funny one. If a client has already is in employment and it's a separate business that they're setting up, then yeah, absolutely. They must be carrying on with their full-time employment. We wouldn't use it as a start-up business without any background knowledge of that business, things like that.
Okay, and Harry has asked, which I can answer this one, Stacey. Harry's asked, do you lend on second charge on buy-to-let properties also? Not yet, Harry. Basically, I think Stacey covered that at the beginning, but not yet. It's currently the client's residence or their second home, but not currently buy-to-let. But I would expect that will probably come out in the future. I would think so, because it would just make sense to do so, more anything else.
Absolutely.
This wipe the floor of what's out there with the competition. It really would. And also, obviously, great if you've got clients that are looking to buy properties at auction, for example. To have this facility takes away the worry of raising finance in 28 days. Also, it's a lot cheaper than raising a bridge.
Well, why would you not?
So I've got a couple of questions. These are the questions that you set yourself, Stacey. So here we go. Do Selina conduct further affordability checks or credit searches before each drawdown?
So the answer to that is no. It's a flexible facility. The amount that the client would request day one would be the amount that we are assessing them on. So there's no further checks. Just like when you take out a mortgage, your mortgage provider in year 3, 4, and 5 doesn't come back to you and ask you what you're doing for your work, assessing whether your income is what it was back then. So no, we don't do any more checks.
Okay. Second question is, what are the differences of using a Selina facility over other second charge lenders in the market with similar rates?
So I suppose we have no early repayment charges. Yes, there is other second charge lenders that are similar. But like I give the example, client wanting to do home renovations and then has maybe something in the future that they're wanting to do, they won't withdraw the money day one. So they only pay interest on the amount that they're taking. So for example, like the wedding example that I give, they're not needing that money for another 12, 18 months. So they won't pay any interest on that. It will sit there in the facility. They've got the security of they know the money's there available when they need it. But they just don't need to start paying interest on it right now.
Which makes massive sense. Think of your clients that have got school fees to pay, for example.
Absolutely.
Your clients that are looking to do property extensions. Think your clients that are in the buy-to-let market, are buy-to-let investors. There's so many uses for this product. It is unbelievable. A good example is that we had a buy-to-let application come in before Selina launched this, and it was dragging along during COVID, as many applications have. And we've eventually got to valuation stage. It was going through the mortgage lender, I believe, this case as a buy-to-let remortgage. We weren't happy to do so at that stage because he was repaying a Paragon mortgage he took in 2007 that was 0.6 over base for life. So, but it was what it was. So we got the valuation back, and basically the property was not mortgageable. The buy-to-let property wasn't mortgageable because it didn't. There's that dog again. It didn't comply with building regs. So case came over to me as a decline. I looked at it and spoke to the customer and said, have you thought about maybe taking this product through Selina? And he jumped at it. And that guy is now borrowing £220,000 on his property because he got equity. Still less than 50% LTV. And he's going to use it to invest in property because that's what he does. And he's more than happy to use his home as security to do that. So it is a fantastic product. It really is. We've got a couple more questions that have come up here. Jamel has said, what is your criteria regarding the income of the individual?
So we're pretty standard, to be fair, with the industry for second charge. And we look at employed clients, self-employed. Minimum income is about 25,000 for a single application.
Okay, and Belinda Milton has asked, I'll answer this one. What FCA permissions does a broker need to refer a second charge? Well, to offer advice on a second charge, you need regulated mortgage permissions. I'm not sure exactly what the term is with the FCA, but basically you need to be authorised to offer regulated mortgages. If you do have those permissions, you can package, because Selina are not taking messes of brokers on, because I believe that Stacey is the one and only BDM they've got. I'm not even classed as a BDM, you're classed as a key account manager. Yeah. But she's the only one out there. So as you can imagine, that would not be able to cope with taking on hundreds, if not thousands of brokers.
Not
ourselves yet.
That's what you guys are for. That's what we want you to do.
Exactly. So we offer, which I'm going to cover later on in my presentation, we offer two routes to Selina. Either it's one where you refer to us and we give the advice, or you refer to us and you give the advice. It's entirely up to you. And the most important question of all from David Winsell is, what is the dog called?
Woody.
Woody. I thought it was called
Woody.
Cut Up at one stage, but it's called Woody. So there you go, a dog called Woody. Right, Stacey, that's all the questions we've got. There's no more questions from any delegates. So thank you so much for that. I know you was a little bit nervous to start with, and apologies that you were chucked in the deep. And I had a whole load of notes about Justin Bieber, but unfortunately I couldn't get to any of them.
No, I was waiting for those.
No, it's not a problem. I chose that picture especially because it was the most recent picture I could find. It was nice to do that.
Okay.
Now you grow a beard. So.
Sorry about the dog and someone at the door.
That's no problem. Don't worry. You can't help people coming to your door. You certainly can't help a dog barking. So, anyway, okay, everyone. That's Stacey. Thank you very much. What we're going to do. This is our next speaker, which is the lovely Gaynor Morgan from YBS Commercial Mortgages, and you should have received this from us this morning via email. There's a couple of delegates who've actually signed up in the past 15 minutes. I've not had a chance to send these to you as yet, so I will do so once we get Gaynor on, and she's obviously doing her presentation, and I'll go off into the background. So you should have had this morning, hot off the press yesterday. So we've managed to add this on last night. So a little bit about Gaynor, first of all. She's been with Yorkshire Building Society for 10 years. It was previously, you might remember, Norwich and Peterborough Building Society. Sorry, not 10 years, for 17 years. And she spent 10 years working in the residential lending side before moving into commercial lending, where she's now been happily working for nearly 7 years. She has experience in dealing with commercial investments, owner-occupied loans, corporate and personal buy-to-lets. Over the course of her years within the finance industry, Gaynor has enjoyed developing her knowledge and skill sets and has completed her CMAP, that's pronounced, DIP BB and C, and has recently passed a DIP FA. Okay, so as qualified as they come by the look of things within the marketplace. And her interesting fact, and she's still not appeared in the delegate list, so her interesting fact is she's a second-degree black belt. Believe me, if she says no to a case, we don't argue, and has won numerous British, European and world titles over the years. It's true, this is, I've read up on it, and she's very well known within that particular sport and has had the honour of travelling around the world to do so. Gaynor has also won Peterborough's Sportswoman of the Year twice. So, like I say, not to be messed with, but she really is lovely. She really is lovely. And I could say anything I want about her, really, because she's still not on. So I'm not sure where she is. I think what we may have to do, we have had this once before, where it was actually, we did have a speaker who we found out, this is why we always check with the speakers before the shows, that their computer and their internet connection is okay. So we did have a speaker who was trying to connect and didn't have a camera or a microphone. So obviously something of a problem. So what I did was to phone that person. She did the presentation over a phone with me holding the phone up to my microphone throughout, and I was clicking the slides. So hopefully we won't have to get to that, but I'm just looking to see if, okay, I've just had a message that my team are on the phone to her, and apologies. I did say it was all down to technical issues when things go wrong. Normally nothing goes wrong at all. This morning, I blame Windows, personally. No, it's still not there. Okay, so we'll get on to her very first one, which is the broker products and processes update. As you can see, this particular thing doesn't like the way this has been put together. It's got June 2021 in the middle of the word update. So just bear with me for a moment. I'll find out where we are with her. Looks like both the people I'll be speaking to are both on the phone. Probably one's on the phone to her, one's on the phone to someone else. So, okay, well, I'll start. Well, I'll tell you what I do. I'll start with a little bit about the Yorkshire Building Society process. As you probably mentioned already, Norwich and Peterborough Building Society initially, we was on a panel for many years. When they were rebranding, they decided to sort of close their panel off for a while. And then once they'd done all their work behind the scenes, they then was inviting brokers back onto the panel. So we actually received an invitation to come back on the panel, which was great. They've got a very, very small panel. And I must say, even though we was invited, the process of getting onto their panel was as stringent as it was when we applied for FCA authorization. The amount of paperwork we had to produce was mind-boggling. It really was. But they're a great lender to have on board because they fall into that space They have published products, which is always great because it means we can tell a client exactly what they're getting from day one, what they're due to get from day one, which is always, you know, a good thing, rather than the Barclays, the Lloyds, and that West of this world, where our rates are from 1.5% to 6.5%, and depends what day of the week as to what rate we're going to offer. So we know right from the outset what we can offer, and their rates are very competitive. Quite often they are beating the high street with their interest rates, and also their process is very, very slick, which in the commercial side of things, they're now into holiday lets by HMOs and landlord buy-to-let clients. They're within those marketplaces, and they brought that slickness across to those as well. So a great lender to have. Only place I think where they fall down sometimes is because they do want, if you have a client who has a number of limited companies, they just want details on all the other limited companies. Sometimes that might be accounts. And I've got one client at the moment who's got 47 limited companies active at the moment. So it wasn't a client we could place with YBS purely because it just wouldn't have worked. I could never have gathered that much information together from that particular client. So, and she's still not appearing. And I've now muttered on for, oh, no, she's in the room. Okay, so she should be with us any second. She looks like she's on her phone. She's doing this from her phone. So it might be a situation where I might have to click the slides for her. And now she's gone again. Don't you just love software? There she is. Gaynor, can you hear us?
I can hear you. Can you hear me?
We can hear you. Yeah, you just froze for a second, but unless you've just stopped moving. But can you hear us?
Oh, yep, I've got you.
Okay, can you see the screen, and are you able to sort of like move? You can see the screen, I presume.
I can see the screen, but I'm going to need you to move the slides for me if that's okay. Sorry,
that's no problem at all. You just if you say next slide when you want me to move it forward, I'll be your less than glamorous assistant for the next 15 minutes.
Thank you. Apologies about that. Trust it to be me. So I don't know if you've done introductions or anything as of yet.
Very brief. I've just done your introduction, a little bit about YBS and our experience with YBS so far. So that's all I've done so far.
I hope. Okay, then I will take on from there. Thank you very much. So obviously, thank you for the introduction, the opportunity to speak today. As Tony is obviously already mentioned, I'm Gaynor and I'm one of the relationship directors here at the YBS. Myself, I've been with the society for 17 years now, so as you can imagine, I've seen many changes the business has gone through over the years, but none probably is more prominent than in the last few. Some of you may or may not know that we were previously the NMP, and following the merger with YBS in November 2011, we eventually rebranded ourselves as YBS Commercial. We have actually just sort of hit our 2-year anniversary under the YBS Commercial Mortgages banner. One thing that we pride ourselves on at the YBS is the level of service that we're able to offer to our customers, and this has been recognised with us winning the Best Service award from a commercial mortgage provider at the Business Money Facts 2021. Obviously, for us, it was even more special winning it this year, knowing obviously what everyone's gone through in the last sort of 12 plus months. To help us achieve the level of service behind that, we do have sort of single point of contacts at every stage of an application process. That starts with myself as one of the relationship directors, customers, introducers, able to have sort of direct contact with me to discuss applications, inquiries, and that continues throughout the course of the loan all the way through to sort of completion. At the start of last year, we established 3 new commercial mortgage hubs, one based in Birmingham, one Manchester and one Bristol. That added to the existing office here that we had in Peterborough. We've recently also been given the go-ahead to look to further expand those teams, which again, I believe reflects our appetite and our commitment to growth and for us sort of being prominent in the commercial market. As with most, we've seen the market change quite considerably within the last 12 months. The society took the stance during that period that we didn't want to withdraw from the market like a number of our competitors, but ultimately we recognised that we did need to take precaution on the offerings that we had during that time. As a result of that, we did reduce some of our loan to values and appetites around certain sectors, but since then we've continued to review those, and have gradually been able to ease some of those off and re-enter in the markets that we'd stepped away from for a little period. We also pride ourselves on being a lender that takes on board customer feedback and the demand in the market. And as a result of that, we've recently seen the introduction of holiday lets and HMOs into our arsenal of products. So the type of loans that the society is able to cater for is your commercial investments, your semi-commercial, owner-occupied, corporate buy-to-lets, personal buy-to-lets, holiday lets and HMOs. Kind of a mixed bag, a one-stop shop. We want to obviously be able to help those seasoned investors who have things in different areas that they don't need to go to many different lenders. Tony, if you can move on to slide 4 for me. Keep going. And again. And go again. There we go. So as a lender, we are focused at this time on supporting experienced investors, typically those with portfolios, although we can look at the single asset transactions. As such, for a buy-to-let application, we require a minimum of 12 months buy-to-let experience or 2 years commercial investment experience, and for a commercial application, a minimum of 2 years commercial investment experience. Over the course of time, this may be an area that we can look to revisit in order to help to be able to assist again with first-time landlords. Obviously on there you'll also see the maximum exposures depending on sort of the areas. Tony, can you move to page 5 for me? Thank you. Where we're lending to a new customer to the society, we can consider up to 75% loan to value for loans up to 5 million. Anything over 5 million, we are restricted to 65% loan to value for a new customer. A new customer for us is somebody who's had 3 or years less track record with the society. For a customer who's had 3+ years track record with us, loans over 5 million, we can still look to consider 75% loan to value. On the slide on your screen, you'll obviously see sort of a breakdown of our maximum lending limits per product. So obviously buy-to-lets, you can look up to £15 million, commercial sort of 10 million or 20 million, depending on the experience. I won't run through sort of each individual one. Tony has got the presentation that he can obviously share with you guys if you want to look more closely into that. But I think one thing again, sort of just to highlight, is that over the last sort of year, 2 years, we have increased our maximum exposure. We were at £10 million, and that's now been increased to 15 or 20, depending on the customer and their relationship with us. So again, to me, that is evidence of us wanting to grow and wanting to support the market. I'll now take the opportunity to run through more of an overview of the offerings that we have sort of around the commercial and semi-commercial products. So Tony, if you can go to page 9 for me. And again. And again. And one more. There we go. So society is in the market for both investment and owner-occupied proposals. This is something we've continued to do for many years now. All of our loans are individually priced and they're done on the merits of the application. So this is taking into consideration your loan amount, your loan to values, the location of the property, the type of security. Is it industrial? Is it retail? Is it office? The type of tenant. Is it a local cover? Is it a blue chip tenant, which we define by the Dun & Bradstreet ratings? The lease that's in place, how long's left, is there any break options, and the client, so their background, their experience, and how strong they are really. Most of the loans will be priced between sort of 3.5 to 4.5 over the Bank of England base rate. That is just a guide. As I said, everything is individually priced. You may see it slightly lower, you may see it slightly higher, depending on the deal that's presented to us. As it stands at the moment, we aren't in the market for your hospitality and leisure sectors, which is your pubs, hotels, restaurants. We do hope that in the near future we can sort of go back into those areas as we're now obviously seeing the restrictions are easing off, and the business in those areas are picking back up. On the table in front of you, what you'll see is sort of a bit more specific about the asset types that we can consider in the sectors that we're able to go into. and it'll also break down sort of the loan to values per sort of sector that you've got. Typically at the moment, most of the deals that we see are sort of around 65% loan to value, but as detailed on there, there is scope to go up to 75% for your sort of your industrials, warehousing, manufacturing, those type of properties. Maximum loan to value for any owner occupied deal is capped at 65% at the moment. Again, that may be something we can shift in coming months and look to go back up to 75% on those as well. For the society, we class a owner occupier as somebody where we're lending to an entity. That entity is also going to occupy the property. If the client is buying in one entity and then looking to lease the property to another of their entities, whilst the UBOs may be the same or there may be common ownership, because it is technically two different legal entities, that to us is not classed as an owner occupied, and we would treat that as an investment. Just sometimes we do get confusion from people over that. When working out sort of the repayment coverage, you're looking at 100% cover on either 7.25% or pay rate plus 3.25, whichever is the higher. So obviously for an investment, you're looking at the rental income that's coming from the units to work that out, or obviously for an owner occupied, you're looking at the EBITDA to provide you with the 100% cover. With the owner occupied, you're generally looking sort of for 3 years financials and looking at sort of an average over the years. If somebody is looking to occupy their business in that property, but also an element of renting it out, so a semi-commercial where you've got retail at the bottom, a residential at the top, we can look to factor back in the rent they're going to have from that residential, or obviously if you've got a mixed commercial and they've got another commercial tenant going in, we can look to factor that back in when we work out the calculations on top of the EBITDA. Most of the commercial loans that we do are on a capital and interest basis. We are able to consider part and part or potentially 5 years interest only, with the remainder being over a capital and interest basis. That option though isn't available if it's a pure retail or pure office at the moment. Arrangement fees 1.5%. The society would pay the introducer 1% of that. We can look to add 1.25% of the arrangement fee to the loan. That's providing that we don't exceed the overall sort of loan to value cap that we've imposed from the start. Minimum loan amount's 500,000. However, that is a collective sum. So if the customer is looking to bring a number of investments to us, whether that's buy to let, whether that's HMO, whether that's commercial, if the collective debt is over the 500,000, that's something we can consider. Loans are generally for 5 to 25 years, taking applicants up to the age of 75. We can base that on the youngest party that's involved. I say that on the basis if they've had some involvement in the transaction and in the investment. If obviously they're looking to add son, daughter who's at university and doesn't really know anything to do with it, I probably wouldn't be looking to do that. Any loans over £2 million, we do have a maximum committed term of 10 years. Although we are only committed for 10 years, it doesn't mean that we can't structure the deal and the repayment profile over a longer basis. So we could still potentially do a 25-year repayment profile, but just provide you commitment with sort of 10 years. We're not also restricted to offering the same loan term as the lease term. So I know sometimes I do get asked if there's only 3 years left on the lease, does that mean I can only do a 3-year term? No, that's not correct. Obviously I'll take into consideration what the term is left on the lease and what break options are there, but I mean providing the value is confirmed there's suitable demand, and there's no reason we can't be looking to offer a longer repayment profile. Commercial loans, we're able to consider lending in personal names, limited company, or to a pension. Obviously pensions are governed by their own rules, so it's 50% of the pension fund. We can also lend to new SPVs, existing investment companies, or even existing trading companies. There's no sort of preference for us there. It's governed by whatever the customer is looking to do, and ultimately, I suppose, taking advice from their accountant, which is the best way to structure it for them. We don't insist on taking business banking. We don't offer banking facilities, so that's not something for us. We also don't generally look to take debentures. So again, I know that's something that you see a lot more people asking for as well. As a standard for us, we would be looking to take first legal charge over the subject property. We'd look to take guarantees from the directors, shareholders if we're lending to a corporate entity, and we'd look to take an assignment of rent if we're lending on an investment. We're lending in England and Wales, not currently lending in Scotland, and we are generally lending against the lower of the purchase price, market value or vacant possession. We're a bricks and mortar lender, so we're not lending on land alone, and we'll be looking to take into consideration what alternative use there is on the property, along with the valuer's comments about the relet demand, resale demand of the property in the local area. Tony, if you can go back a page to page 8. Sorry, I'm catching you out there. Earlier this year, we have also launched a new semi-commercial product, which you can see on the slide. Taking again feedback from the market and from our customers, we did reduce the rate on that. So initially when we entered, we were at 4.7% on the 5-year fixed rate. We've now reduced that to 4.35. On top of that, we then introduced a 10-year fixed rate, which is at 4.8. The semi-commercial product is aimed for properties where 50% or more of the capital value of the property comes from residential. So it's not the rental, it's the capital value of the property. The products are interest only for the fixed rate period, after which they'll convert to capital and interest and to our standard SVR. The client doesn't have to have interest only. If they don't from day one, they could go on capital and interest from day one, but there's that option. You'll see on there the fixed rate for the 5-year is loan to value of 70% and the 10-year fixed rate is at 65%. Again, just because the capital value is over 50% doesn't mean the customer has to apply for a 5-year or a 10-year fixed rate. You can still have the option of a variable. It's just obviously we know people are keen to move into securing a longer profile at the moment, so the option is there. We understand obviously at this time that there are many people that have made use of CBILS loans, bounce back loans. That's not something that we would automatically penalise a customer for. Obviously we know it's been a hard time for many and different circumstances. So each loan will be looked at on its own merits and its own circumstances. One shoe doesn't fit all, and I think it's key that we take that on board and really understand the customer and what's gone on. Obviously, we want to know how they've been impacted by COVID, either directly themselves as a business, if it's obviously owner occupied, or if it's an investment, how their tenants have been paying and have they maintained, are they back on track? So for us, it's really understanding the client and the position they're in. Tony, if you can move on to page 10. Next one. Oh, you've gone backwards.
Sorry, it says 10 in the bottom right corner.
Oh, so it should be our processes. I apologise.
Oh, okay, no problem.
There we go. So here you'll obviously see the process of submitting the applications to us. All the applications do need to come through Tony and the team at Specialist Finance. We do have a select panel of introducers, and we do that so we can continue to operate the service that we've got. Obviously, the introducers on there know how we operate. We understand how they operate. So anything that, obviously, if you guys did want to send anything through, just have to come through to Tony. More than happy that we have initial dialogues with you guys. You are at the forefront of the process with the customer, so understand a bit more about the deal to start with. So more than happy to take calls and inquiries. But once it gets to an application stage, that's when Tony and the team will obviously step in and move forward with the application from there. As I said, we do operate sort of a direct point of contact. So myself or any other of the relationship directors, whether Peterborough, Birmingham, Manchester, we're all available. All of our contact details are on the slide that Tony's got, and you can email us, give us a call, request a call back, and go from there. Once we receive an initial inquiry, you'll generally receive a response back from us within sort of 24 to 72 hours, just confirming if the proposal is something that we can do, and if it is, on what basis, whether we need a bit more information to help an assessment, or unfortunately, if it isn't something for us, we try and let you know as early on as possible. If it is something we can move forward with, then we'll outline sort of the basic terms, so sort of what rate you're looking at, what term, what profile, sort of the fees involved in that. We would then request sort of your signed application form and supporting documents to be able to move forward. Again, on the slide, which Tony can share with you all, is a list of sort of the basic information that we ask for to be able to move to formal terms. Once the formal terms have been issued, we'd look to progress to evaluation, obviously upon receipt of payment from the client. The customer gets to elect which valuer they want to use from quotes that we obtain. Generally go out to three valuers to get those, and we let the customer sort of choose which one they want to move forward with. Once valuation's back and all the supporting documents have been provided, we'd look to undertake a meeting with the customer before preparing the report to our customer due diligence team and credit for approval. From there, hopefully we'll be in a position to go to offer. And again, as I said, with the point of contact, you'd be assigned a release officer who would then take the deal forward from there to completion. As I said, that is just sort of a brief overview of our commercial and semi-commercial. As I said, there is more to our arsenal, which again is detailed on the slides that Tony's got and can share with you about the other areas that we are in the market for. And hopefully that gives you a bit about us and our background.
Always helps you switch your microphone on. Thank you, Gaynor. It's obviously already been mentioned, but they do have a very small panel, YBS, and we're very lucky to be on that panel. So if there are cases that you believe, and at the moment we're having terrible problems putting anything to the high street, to be perfectly honest, it's the delays. I mean, it's taken 2 weeks sometimes just to get a response from some of these people. So whereas with YBS, literally it's, as long as we can get hold of Gaynor, we get the answer pretty much straight away. We got all the information. So as with the previous two speakers and previous two lenders that were speaking, all the information you need with regards to YBS on our website, specialisthub.co.uk. So just follow that link. I'll probably send these links to you all later on, so you've actually got something you can link to. Of course, or you can just call the team or email the team. So I've just got some questions.
Yeah.
I had 4 questions on my bit, and you've already answered 3 of them. So I won't cover those. But I didn't hear this one answered. Do you lend to offshore companies or customers?
No. So anything for us needs to be UK based. So that's whether it's a limited company that needs to be onshore, or whether the actual UBOs behind that, they also need to be onshore. So no offshore borrowing for us.
Okay. Michael Bill has asked, a couple of my clients have limited companies with a number of shareholders, some of which are young children. So do you get all shareholders to sign guarantees?
No, I think it's taking a sensible approach on that. I mean, if you getting a young child to sign a guarantee, they don't really know what they're signing and what they're entering, and it probably wouldn't stand up in court. So no, I would be looking, obviously, mum and dad, if they're the driving force behind it, they're going to have the wealth and that behind them. Again, the young children probably don't have anything to take collateral over. So no, I wouldn't be looking to do that, and it would be taking a sensible approach. Who's the best people to take your guarantees from?
Okay, a final question we've got, because we are almost out of time. Harry Gupta has asked, if a customer has less than 15 buy-to-let properties in individual names and more in SPV names, will you lend? Also, does it apply to commercial loans also? So
15 buy-to-let properties in individual names and more in SPVs. Yeah, so we can lend. It doesn't. We're not specific to how many the individuals have. We don't have a cut off. The only thing I would say is the personal buy-to-let criteria is a bit more strict, and the slides will cover that a bit more for you. I've obviously not gone into that, and that's purely because obviously we do also we're also part of Accord Mortgages, so we try to offer outside what they can offer. So we can do personal buy-to-lets, but there's a stricter requirement around it. But we don't say that customers have to have a set number of buy-to-lets for us to be able to look at an application for a loan. If that kind of makes sense and answers your question, Harry.
It does. I can speak to you, Harry, separately if you need any more. And I'll cover in my presentation later how we deal with YBS and others as well, how we deal with the calculations and how we can get that information out to you very quickly rather than sitting there with a calculator, which I know some of my competitors still do. Dana, thank you very much indeed. Really appreciate it. Sorry for all the problems at the start. I'm not sure what happened. But still, these things are sent to try us. Thank you very much indeed. I'll speak to you soon.
All right. Thanks very much, guys.
So this is our next speaker, Steve Smith from Roma Finance. There's a picture of him socially distancing by the look of things because there's nobody around him at all. First of all, we've sent 2 documents to you. Now, these are our. I've just been cut off again. What's happened there? Okay, my slides have just disappeared. I don't know what's happening today. I really don't. If my IT team are watching, can you just pop in the office and just sort this issue because I've disappeared? Oh, there's Steve. Okay, there's Steve. Right, good. We're back. I can now see the slides. Steve, can you hear us? You've got your microphone off. Technology, hey, don't you just love it? Right. Okay. I don't know whether that was somebody else. I've been put back to my initial presentation. So, Steve, don't go towards the left of the screen at all.
Okay.
Just stick to the slides that are sort of like in the middle bit. So if you go left, you're gonna cut me off. So, okay. So, everybody, what we've done is that we've actually, because we've just been accredited as a packager with Roma, so we've actually come up with their product guides with some of our own branding. So you should have received this morning, everybody, their short-term product guide and also their buy-to-let product guide. And that's double-sided pages, has everything that you basically need to know. And these are updated, I believe they changed their terms about a week or so ago. So we've updated everything on those, including the launch of their new Bridge 75 product, I believe they call it.
Correct.
Okay, so a little bit on Steve first of all. Steve is National Sales Manager for Roma Finance, managing the sales team to enhance the broker experience and business growth. He has an impressive background and is dedicated to supporting the intermediary market. His career began at the Royal Bank of Scotland, progressing through the commercial arena to regional manager. Moving to a financial brokerage, he became the first commercial manager to run the sales team and undertake asset finance, property finance and business loans. Steve joined Roma as a BDM back in 2016, looking after the South West and South Wales, before working for Shawbrook Bank and then Glenhawk. He returned to Roma in 2019 as a senior BDM before his promotion to National Sales Manager in 2021. And his interesting fact, everybody, I mentioned my interesting fact earlier on that I am in the process of writing my own cookbook. Well, Steve is our published author. And he wrote that. I did click it. I was actually going to put a copy of the book up, but I couldn't get a decent enough image of it from Amazon, unfortunately. But if you do wish to buy Steve's book, then 20% of the proceeds will come to me for flogging it in the first place on his behalf. Yeah, apparently it's. I did look at the reviews, and every single review was great book. Can't wait for the next one. So there you go, Steve. You start seeing an uplift. It's down to uplifting sales.
Down to you, Tony. It's down to you.
Down to board. Down to us. It's down to all of us. So, Steve, it's over to you. I'm going to disappear for 15, 20 minutes.
No problem.
And we are a little bit behind time, but you've not got that many slides, so I'll speak to you soon.
Thank you. Okay, so I hope everyone can hear me. I'll rattle through these slides. For those who don't know Roma, we originated 12 years ago as a bridging lender dealing with auction purchases. We've moved on from that considerably over the last 12 years. And now we basically do a whole lot of funding across lots of different funding lines, institutional backing, as well as our own funding. So we have plenty of cash to spend, you'll be pleased to know, and we're looking at spending all of that cash as quickly as possible. So moving on. So we've had looking at the bridging market, and we all know, I think on this call, it's a massive market now and it's getting bigger and bigger. A lot of that is to do with the way people conduct their finances, and a lot of that is to do with the high street lenders backing off and coming away from certain markets like specialist markets. Hence, people like Specialist Finance Today will find those markets for you, and they are smaller lenders, institutionally backed. So just as a very simple start, refurbishment is by far the most common bridging. As you can see through the slides, there's a lot of reasons to do a bridge. A lot of them are purchases, a lot of them are refinance. Looking at the trends, and I won't go into this too much, there's a lot of trends in the short-term market. We're looking at very, very big trends. It's significant for us. I think for lots of people in brokerages, they're finding that bridging comes into its being a lot more now than it used to. We've had increases of 40 and 50% over the last 2 years alone, so it's only going in an upward cycle. And basically, we are a lender out there that have customers at heart, and I know everybody will say that, but we are swift, and we do look after our customers. Over 20% of our business is now actually customers coming back to us, so it's a significant portion. We look at understanding the borrower, we look at the customer's needs, we meet the borrower, and we discuss sort of costs, timescales, background experience, and the exit is also very important for any bridging. But what do we actually do? And that's probably the main thing. We do residential bridging finance, we do semi-commercial and commercial bridging, we do refurbishment, and that can be basically heavy, medium or light. We do ground development, we do auction finance for speed, and we also do buy-to-let, hold-to-let, serviced accommodation 5-year term loan. So they're our products. They can be found on our website as well as just coming through to the brokerage here. So our short-term lending, so your basic residential stuff, we do 75% on standard bridging finance. We lend in England, Wales and Scotland, and we do, we class residential as also mixed use HMOs as well. We look at it from 30,000 upwards to 3 million, and our rates are from 0.65% on our standard bridge. If you go from there, our development finance is completely different. Rates are around about 0.991%. They can be from 100,000 to 2 million. We can do more with obviously additional security, and we go up to 65% loan to GDV. Again, we also do development finance in Scotland. We generally go to up to 6 new build dwellings, but again, larger projects are considered. We've just done one for over £2 million, which was 12. So don't be put off. We look at really sort of looking at the customer behind it and the borrower behind it. If they've got finance and they've got sort of experience and assets behind them, we can go well above the 3 million if we need to. One of the things that we specialize in is modern methods of construction, so it doesn't have to be bricks and mortar. We do look at other kinds of, there's a lot now out there. There are a lot that are actually man-made as well as sort of timber framed, etc. We're quite well into the eco world, so with the timber frames and also the sort of the more modern terms of building, we look at that a lot. We also look at part build projects, and we also look at developer exits. So if you've got something that's actually there, a building that's either a piece of land with planning or a wall or a half finished property, basically give us a call, we can look after it for you. We brought out last year, in the middle of the pandemic, our first 5-year term product, which is a buy-to-let product. We originally brought it out just to really exit our own bridges onto a 5-year term loan because a lot of customers needed that. But also we've brought it out now as basically you can have it as a buy-to-let straight away. So if you buy a property that's ready to be rented out, you can have a term loan straight away with us over 5 years. Our rates are basically 4.99, which includes the Bank of England base rate. We look at non-standard construction, and maximum loan per property is 500,000 and per borrower is 750,000 at this stage because it's our first attempt at such a buy-to-let. It's been extremely successful. We need to have it in a limited company name except for HMOs, which can be an individual name, and top slicing is available. And by top slicing, basically we mean that the rent doesn't have to cover the interest. If you've got other income sources, and they can be any other income sources, we'll count those. So again, there's lots of things we can do. It can be people's first time, which is a major factor. They can be the first time landlord, first time borrower, non-homeowner. So although the 4.99 may put you off, there are a lot of markets to get to that 4.99. As you can see, we look at corporate borrowers. We look at sort of the repayment interest options are available, no minimum ownership at all, income or experience. So it is really out there. We also have a holiday let and serviced accommodation options, as well as a HMO, which, as we know, is extremely popular at the moment. And we've got a lot of landlords that use our HMO because the rent that they're getting is huge. So you look at that and you can obviously see that the rent will be covered. But even if rent isn't covered, you can top slice from other sources. Give you a couple of case studies because I always think they kind of fit well if you can visualize where you're going. So, for example, this was a commercial to residential scheme, which is huge at the moment. We're seeing that on the high street with the change in lifestyle, with COVID, with just the change of the emergence of Amazon and all of the e-commerce. A lot of our high streets are changing. So we do a lot of commercial to residential. And all that is, it was basically, we classed this as a heavy refurb because the shell of the property was going to be the same. They're just changing obviously internally so that a house would fit. And as you could see, simple enough, it was a purchase price of 187. The build costs were significant, 332, but the GDV was 990. We gave them a gross facility of 473 and a day one advance of 111 to actually help to purchase. And they basically bought the 3 tile units and converted into 3 new build homes. There's a couple of pictures that are a bit small maybe for you, but if you can see, worked very well. The borrower was a limited company with 2 directors, one of which was a builder, one of which was a plumber, so perfect. It was their first actual facility that they developed. They'd done sort of refurbs before, and the building extensions, which was the first major sort of building that they did. And they've now done 2 or 3 others with us, to be fair. So they've gone from strength to strength. The second case study was what we see a lot of as well. It was a purchase and renovation of a flat above a semi-commercial property. And basically on this one, it's quite simple. Gross loan, as you can see, very low loan to value at 58. The total property value was 480. You can see that security property was purchased in a 2-bed flat above a shop and warehouse. The borrower already owned and encumbered, so there was no real issues with that. The commercial then warehouse at the backyard of our security in the process of planning for 2 more detached houses. They've actually now got that plan. I'm pleased to say we're actually done in that development. The development funding is already in place. We're actually going to do that. I think it starts July the 1st. So again, there's, you look at those kind of things. You want to look at how we can help and repeat our customer satisfaction. Also, from a broker's point of view, if that client comes back to us independently, you get the commission on that straight away. So, we're not going to get you out of the loop. What we want is a happy broker and happy customer. And obviously, therefore, we all make money, every one of us. So the package status is obviously through Specialist Bridging Finance. You go to Tony and he will find our direction to us. It's not a problem there at all. And obviously for documentation, you can see here, documents available. Any discussions that you need will go straight to our bridge inquiries. You've also got, my details that Tony will have, as well as Daniel Hills, who looks after Specialist Finance as well. You can come through to us and we'll get you AIPs within the hour, and really an adult conversation with an underwriter if you need one, if it's a difficult case, to talk through straight away, and to get things done. We pride ourselves in our customer service, but also in our broker service. And also we can look at very difficult cases because we'll look at them as a human looks at them and not a tick box mentality. So, if you've got any questions, just let me know. Tony, I couldn't have been quicker. Come on, mate.
Steve, that was absolutely fabulous. Blimey. That was like speed reading at its best.
Yeah.
I might even download your book now. Blimey. That was superb. I've got some questions that you actually set yourself. I'm not going to lie and say we set the questions. One thing I will say about Roma, it's one of those rare lenders that not only are the people that they've got incredibly experienced, which helps tremendously, as you can imagine, because they're trying to find ways to do deals. But as Steve just mentioned, one of the things, if a client goes back directly, it's still classed as the broker's case and not the lender's case. That's fairly rare these days, because most lenders don't actually think like that. So it's nice to see lenders thinking like, thinking as a broker would, as such, which for us is great. Okay, so the 3 questions we've got. What is your appetite on commercial and semi-commercial properties?
It's absolutely fine. I mean, as we all know, there's been a problem over the last couple of years. There's no getting away from that. And but if your commercial property is office-based or retail-based, we're quite happy. If it is a pub, hotel, B&B, something like that, it's more difficult, but it depends on the borrower. If the borrower has assets in the background, if he's experienced, if we know the story, we're quite happy to look at those even now. We did a gym literally deal last month for £1.8 million, and as you know, that's not an ideal commercial property at the moment, but the borrower behind it was absolutely spot on. So, you know, we're quite happy to look at those deals.
Okay. Second question, what is your biggest cause for an application being declined?
I would say the biggest cause for application declined is credit. If sort of when we get to, because we set up, we don't credit search initially, we look at the deal, talk about it through the broker, get the application forms, and then we obviously credit score. So if we credit score and it's troublesome, that's generally when it's declined. That's our biggest decline rate in deals that we do. With credit, I will just sort of say, credit scoring, we don't have a problem with the one-off CCJ, we don't have a problem with the odd missed payments, but if it's like 6 months of not paying their mortgage, we do have a problem. That's not the deal for us.
Just going to point out, this is covered in my presentation once Steve's finished, is that one of the things we do, we're very lucky because we're within the second charges, we have access to Experian and Equifax with the information relating to the client's credit as well. So one of the first things we do, and I'm going to cover this later, is we credit search with the client's authority. We get the credit search done before we present to a lender, because we want to ensure that we're going to cover off anything that might crop up, rather than just leave it to chance that the client is telling the truth. And let's face it, none of them ever do, or very few of them ever do. So that's why that's something that's a given. So that's not a problem that we tend to have, to be quite honest, unless something crops up in a search that we don't see, which is very, very rare. Final question, which is actually you and I can both answer this. How quickly do you pay commission out?
Very easy answer, you'll be pleased to know. If the deal completes in the morning, you'll get paid in the afternoon. If it completes in the afternoon, you get paid the following day. So
okay, and if you come through us and we're packaging the case, if regardless of what time the case completes, as long as I've got your bank details, we pay the same day, always. Okay. Again, I'm covering that in my presentation. So that's literally, that's always the case, and without fail. Mike Hurd, hi Mike, hope you're well, has asked, are there any fees, etc., to redeem the loan? What solicitor fees can be expected at exit?
For fees to redeem the loan, it depends if there's an exit fee in the deal. If it's a standard bridge or a sort of commercial bridge or anything that isn't a ground-up development, right now we don't do exit fees. If it's a ground-up development, there may well be an exit fee of a month. So that would be the sort of fees involved in redeeming the loan. The solicitor fees that can be expected at exit, they are slightly different depending on which solicitor is used, but we try to keep it in the same package. And they're very limited. They're the standard ones that you would have at every lender. It ends up being sort of, when you're redeeming charges, there's an admin fee according. I can get a list to anybody who wants one. We've got a list, we portray it on our website, and we can give you a list of all fees that pertain with legal ending. Not a problem.
Okay, and Mike, also just check the criteria I sent you over. If you look on the right-hand column of the rate tables, it lists the exit fees within that column. So, yeah, all that information's there. Atul has said, ground-up development, what is the minimum loan amount, please, and do they need to be experienced?
100,000 is the minimum loan amount for a ground-up development, and they don't need to be experienced as long as they're using a builder who is, or a contractor who is. So as long as there's experience within that team or a project manager, we're happy with that. Great.
Okay. Right. No more questions, Steve. Thank you very, very much indeed. Hopefully see you soon, face to face. We're now accepting BDMs back into the office, which is quite weird actually seeing people face to face. You've not seen for quite some time. But come and see us soon, Steve. Okay. Thank you very much for the presentation. Brilliant. Thank you.
Thank you.